Hello, I'm Donald Leggett, and this is Share Views brought to you by London South East. I'm joined in the studio by Paul McGlone, CEO of the driver monitoring technology company Seeing Machines, which operates globally, is headquartered in Australia, and is listed on AIM.
Correct.
Welcome, Paul.
Thank you very much.
So you're a busy man. You had a capital markets day yesterday.
We did. We're very pleased with how that went. Had over 100 in attendance, a good mix of institutions and private investors.
Fantastic.
Yeah.
Let's start by asking you what driver monitoring technology is, how big the market opportunity is, and what position do Seeing Machines actually hold in that market?
Look, if I can make it real simple, driver monitoring technology detects fatigue and distraction in drivers, and the market is growing very, very quickly. It's been driven by safety regulations, primarily here in Europe, but very, very rapidly expanding around the world. Independent researchers estimate that driver monitoring technology will be in more than 70% of all vehicles. And you know, there are roughly 100 million vehicles manufactured each year around the world.
So we're talking huge market potential.
So we're talking very large numbers.
Very good. And what position do Seeing Machines hold in that market?
Well, we're a market leader at the moment. Of those automotive manufacturers that have taken up driver monitoring systems, we would have roughly 1/3 of the market that's been awarded so far.
So quite a dominant position.
Yes, we think so.
Okay. Now, in very simple terms, what does your technology actually do? What does driver monitoring technology, as sold to customers by Seeing Machines, what does it actually do?
Good question. Very simply, we track the eyes and the face, and through that we can determine the level of fatigue and distraction, and then we alert the driver, and this is a primary mechanism to bring them back to attention and back to the job of driving the vehicle.
So how does that actually work? You're driving along, you get a little bit snoozy, you feel yourself nodding off. What happens next?
So there's some escalating alerts inside the cabin. They could be beeps, buzzers. In our fleet or truck business, a vibrating seat. And it can also include a real-time alert from our 24/7 Guardian Centre.
How fantastic.
Yeah.
And it's all driven by data and algorithms. So if you could explain to me what the AI behind it, what all the clever stuff actually does.
So the clever stuff is really understanding the face, and understanding the pupil, developing vision systems that allow very accurate tracking of the pupil, and then complex mathematics that turn that vision into software. And it's that software that we embed in a product that delivers the mechanism to determine whether you're distracted or drowsy.
And all that driven by data and algorithms. So is that an example of AI and how big data works?
It is a very practical example. I think one of the big differences between us and others is we have this access to an enormous amount of naturalistic data. So we're applying big data and very powerful algorithms, but on real world scenarios. So we're not simply fabricating results by churning this massive amount of information over and over again.
Okay, and where does that data come from?
That data comes from our fleet business, the 16,000 trucks and the 5,000 mining trucks. So every single fatigue and distraction event that occurs in those trucks is captured. And to put that into perspective, last year alone, we intervened in 115,000 fatigue events. So if you can imagine fatigue, distraction in all of those trucks, every day of the week, sometimes 24/7. We capture that data, and that data we use to continue to train the technology.
That's a lot of learning.
It's a lot of learning.
Okay. And use of technology like this is soon to be enforced by legislation, I understand?
Look, one of the very positive sort of overarching mega trends here is that with 1.3 million road deaths a year around the world, regulators are getting very, very serious about safety and very, very serious about fatigue and distraction. So in Europe, we have a Euro NCAP that's very advanced in their thoughts and processes around the deployment of driver monitoring systems for a 5-star rating. We have the EU Commission about to set in place rules for the same. But what is also interesting is just that dialogue is causing regulators and transport bodies, industry bodies all around the world to get more serious about the implications of fatigue and distraction.
Okay, Seeing Machines is a pretty mighty company in its own right. It's AIM listed. What's the market cap? 150 something?
£155 million.
Serious market cap. And you had a capital markets day yesterday, as you told me at the top of the interview. How did that go?
Look, I'm of the view it went very well. We had great attendance, more than 100 people. We had private investors, institutional investors, we had analysts, we had industry participants. And, the intention for that day was to really take a big step to inform our shareholders of the breadth and depth of our business. So in that regard, I think it was very positive.
So what were the key messages? What did you get out there yesterday? If you had to, what were the 3 key things that you told people?
We are very, very focused on generating cash and profit. We are very, very focused on delivering the existing programs that we've already won, both in automotive, in our fleet business, and in aviation. And the important takeaway is that whilst being a tech business that delivers driver monitoring systems, we do that across 3 distinct transport verticals: automotive passenger vehicles, fleet trucks, and aviation. So there's a very strong case for diversification in our business.
Are those the 3 key business divisions?
Yes, they are.
Okay, and where do you expect the revenue growth to come from? Is it new automotive contracts? You've already got 9 OEM contracts in place, a substantial number of contracts. Is it the turnaround in the fleet business which you've driven, or is it annuity streams from existing customers?
Look, it's the fortunate part about our business today is it's all 3. So we have 6 OEMs, 9 programs. There are numerous new proposals coming from OEMs all around the world. So that business will continue to grow. Of course,
do you have the capacity within the business to deal with that growth?
We do. We have approximately 140 software engineers in our business, and we work also with collaboration partners. So our capacity to deliver is very strong. We've built an extraordinarily experienced team. Many of those have been with us since inception, but we've brought a lot of automotive specialists with decades of experience to help us deliver in these complicated programs.
Okay, annuity and aviation.
So on the fleet business, quite a different business model to automotive. We're selling into large fleets of transport vehicles. We provide a monthly service, and that service delivers a long-term annuity revenue stream, which is a compounding effect on our business. So that's a very valuable part of what we do. Aviation is relatively new for us, but again, it's gaining momentum right now, and that is a far lower volume business with a much higher ticket value. But it is also a recurring revenue business. So the 3 combined balance each other out and deliver quite a unique balance between high volume, lower volume, and recurring revenue.
It is an interesting business model indeed. You've been around for many years, you continue to invest really heavily in R&D, but I get the sense that the business today seems to be more focused on delivery, on installations, and break even. It's all about profitability. Is that a fair
Look, it certainly
assessment?
is. And look, over the 20 years that we've been around, we've spent more than 200 million Australian dollars developing our intellectual property. Where we're at today is we need to leverage that intellectual property as aggressively as we can. And so that's all about delivery, it's all about managing cash, and it's all about doing business that is profitable, not doing all business.
And your break-even is a year earlier than it was previously, as I understand.
Correct. So we now operate on a 3-year plan. We're very comfortable in our cash position, and we're anticipating a break-even towards the end of calendar year 21.
So you've been CEO for a few months now. When did you join?
Well, I joined a year ago and was responsible for the fleet business, and I took over as CEO first week of July this year.
We're already seeing changes in the business. Is that what you've done? Is that what you've brought
well,
to
let me say
the business?
this. We have a very capable team. So to the extent that I've driven this, I think I've given some very clear direction. That clear direction has been accepted by the team, and we are now completely aligned in terms of our focus on delivery, performance and cash.
It's good to hear. Finally, where do you see the business in 18 to 24 months? This is my favourite question.
It's actually my favourite question as well. Look, I'm very excited about our prospects in each of those three lines of business. As we've mentioned earlier, we've got regulations that are driving demand for driver monitoring. We have a great mix of high volume business, recurring revenue business, and to be frank, the unique position that we have, fleet business, delivering recurring revenue, but also a unique data set. That data enabling us to continue to refine the performance of our software, and that's what I think will give us the edge. And I see solid growth in each of those three verticals.
Paul McGlone, thank you so much for joining us. That was an absolutely fascinating interview. Thank you so much.
Thank you very much.
If you'd like more interviews like this one, please subscribe to our YouTube channel. Thank you so much.